And friends, for online services, if any e-commerce operator wants to render services, he will also be liable for payment of taxes under GST. So section 9 subsection 5 has provisions for that also, and it says if any person from outside India wants to give some services in India to any person, maybe individual or business house, then the person who is providing services from outside India must have his legal representative in India. Only then he can supply services and has to pay GST. And if he doesn't have any representative, then he has to appoint someone who will be responsible on his behalf to pay taxes in India. So means if any person from outside India wants to give services online to its clients and consumers in India, maybe online gaming, maybe online education, maybe online films, whatever it is, then that person from outside India must have some legal representative, or he has to appoint some legal representative, and accordingly the tax will be paid. Otherwise, he will not be allowed. Friends, in GST, we have another option for business houses of composite dealership or composite scheme. In our previous slides in GST registration, we talked about that a person who is having turnover more than 20 lakh rupees need to get himself registered with GST portal and get a GST number, and only then he can have its business. So any business house in normal circumstances will do business after having GST registration and charge GST on forward mechanism. For some of the transactions, reverse charge mechanism is applicable. To facilitate to the small traders with some ease of compliances, GST also has a concept of composite scheme. Section 10 of CGST Act deal with this scheme, and under this scheme, if any small trader, even a manufacturer also, has turnover up to 1.5 crore in a year, can go for this scheme. And this scheme is bit easy as compared to normal taxpayer. It has some assumptions and some concessions for compliances. And if any business house or person whose turnover is less than 1.5 crore during the previous year who opted this scheme, there are some rule and regulation for that person. And what it says? It says if person who is dealing with business of pan masala, ice cream, tobacco, or the person if he is service provider, or a person engaged in supply of goods and services not taxed under GST, a person making interstate supplies, interstate yani ki in two states if he is doing business, casual taxable person, business which supply through e-commerce operators. So these category of business houses, they cannot go for this scheme. Law says any business, small trader having turnover less than 1.5 crore can opt this composite scheme, which is ease of doing business, which is easy, which has concession from various compliances. But it says following category of business houses, they cannot go for this scheme. So whenever you are dealing with such type of cases, whenever any person, your client or consumer or whatever the case it may be, asking for composite scheme under GST, under section 10 of CGST Act, make sure he doesn't fall in this category. Neither he should be a pan masala manufacturer, nor he should be a person who is dealing with ice cream or a tobacco, or he is a service provider. Because for service providers, there is separate composite scheme. This scheme is only for person those are dealing with goods and turnover is less than 1.5 crore a year. And also not applicable if you are going for selling your products through e-commerce operators online. This scheme is not available. Also for non-resident taxable persons. this scheme is not available. So you have to keep in mind whenever dealing with such type of cases that if the person is opted for composite scheme, he is not in this category and his threshold limit for turnover is 1.5 and his turnover is actually less than 1.5. And further it says, there are, as I told you, that business transactions are so complex nowadays, and keeping in mind the requirement of a customer, business people supply their goods, deal with the customer accordingly. So they try to give him maximum services, maximum possible services to his satisfaction. So question comes, whether supply person under composite dealer scheme supply goods and services together? Answer is yes, but with certain conditions. And law says a person with turnover less than 1.5 crore may supply goods and services together under composite scheme, but his value of services, means whatever value services he is providing along with supply of goods, he can, under composite supply, he can supply goods and services together. It is allowed, but in this situation, the value of services is important. The value of services should restricted to, means it should not be 10% of the annual turnover in a state. So value of services he is providing along with goods should not increase more than 10% of his annual turnover. So his otherwise in composite scheme upper limit is 1.5 crore. Beyond that he is supposed to go for regular dealership. But if turnover is less than 1.5 crore and he has opted for composite scheme, then he can supply services also, but that services value, the services quantum should not be more than 10% of his turnover. So if his turnover is 1 crore rupees a year, the maximum to maximum he can supply services up to the tune of rupees 10 lakh rupees or 5 lakhs, whichever is higher. So 10 lakh rupees if turnover is 1 crore or 5 lakh, whichever is higher. So upper limit is 10%. And further conditions imposed is that whatever services he is providing, these services should not be services of restaurant. These services should not be services of restaurant. For calculation of above limit of 1.5 crore, exempt services by way of interest and discount of deposit shall not be included. So interest on savings should not be part of his turnover of 1.5 crore for composite dealer, because I told you that interest is not covered under GST, so it cannot be a part of your turnover, neither here nor in regular supply, regular dealership. So composite scheme is another scheme given to small scale dealers having turnover up to 1.5 crore with some conditions. You can opt this also, because this scheme has less compliances as compared to regular dealers. So considering the business size and as per the convenience of the customer, means the client, we have to advise him accordingly if he can go for this scheme or he should remain there in regular scheme. Apart from goods supplier, service provider can also go for composite scheme under section 10 of CGST Act. So here law says if any service provider having turnover up to 50 lakh rupees, he can opt for composite scheme. As I told you, in composite scheme for goods or services, there is some relaxation with some conditions. So they will charge GST, but in different manner. We will discuss that also, because we are talking about levy of GST. So in normal circumstances, dealers, those are registered in GST, they charge GST on forward mechanism, and some of the transactions are covered under reverse charge mechanism. Here in composite dealership scheme, either for goods or services, the dealer will charge under forward charge. So they can charge GST also if their turnover is less than 50 lakh rupees. It is about the case of service provider. And they will charge only 6% GST on their bill. Whatever amount they will raise, they will charge GST, not the regular rate of tax, but 6%. If it is intra-state sale within the state, if it is a supply of service by this composite dealer, they will charge 3% CGST and 3% state GST. And if it is interstate supply, friends, composite dealer cannot supply interstate. This is a basic condition. They cannot go for interstate. So we have to take care of while raising bills or while dealing with such type of cases. Moving further, friends, as I told you that for composite dealer there is a condition, there are conditions, and there is set procedure for their billing and all, for their returns also. So accordingly they have to act if they have opted for composite scheme. So a dealer registered under composite scheme cannot charge GST. What does it mean? If GST is applicable and he is registered dealer under GST, maybe under composite scheme, how he cannot charge GST? No, friends, he will charge GST, but how? It says no such dealer can charge or collect GST in his bill. So if he is a service provider and his services are of accounting profession, related to accounting profession, and such services are subject to GST at the rate of 18%. But a person who is service provider of accounting services has opted for a composite dealers scheme. So when he will raise services bill to his client, suppose rupees 1 lakh rupees a year, he will not charge 18% tax in his bill. This is the condition for composite dealer. Person who has taken registration under composite dealer or as a composite dealer whose turnover is less than 15 lakh rupees, he will not charge GST in his bill. He will simply send his bill of rupees 1 lakh. Then he will calculate GST on his turnover and deposit the same to the government. So as he is a service provider, he will pay 6% GST and he will pay to the government 6% GST on his turnover. So he need not to tax each and every bill or in bill to the client. For calculation purposes, we just given this example. If a composite dealer having turnover from his business 1 lakh rupees and his product is subject to 18% GST, he will deposit 9% GST and 9% CGST, 9,000 each. But he cannot sell interstate. So for calculation purposes, we are saying that he will charge 18%. But actually, under this scheme, under composite scheme, his turnover is less than 50 lakh rupees. He is eligible for that. He will charge simply 6%, 3% CGST, 3% SGST in his bill. Not in his bill, but he will pay to the government on his turnover. So there is a difference. If he is a normal dealer, he will charge 18% GST. If it is intrastate, 9% CGST, 9% SGST. If it is interstate, as a normal dealer, he will charge 18% on accounting professional services. But though, because he is in composite dealer scheme, so here he will charge total 6%, 3% CGST, 3% SGST. This is the difference between regular dealer and a composite dealer. Similarly, in case of goods, also, they have made rate of taxes for composite dealers separately. They will not charge on their bill. They will charge separately based on their turnover. Manufacturer having 1% of GST, trader having different rate of tax for GST, but they will not charge to their customer in their bill. They will pay tax on turnover basis, on their turnover, on monthly or quarterly basis. Now coming to invoices. So friends, in this session we talk about valuation of goods. Then we also talked about transaction value and how tax is levied under forward charge or reverse charge, and the transactions which are covered under reverse charge. And in reverse charge, we understand that tax will be paid by the recipient of the service or the consumer of the goods. And we all know that tax is charged through invoices. So in GST, invoice has its importance and it needs to be raised accurately. So section 31 onwards talk about invoices under GST. And question comes, who can issue tax invoice? Here we are using word tax invoice or taxable invoice, not invoice. Under GST, whenever you are charging invoice under forward charge mechanism, it is always a tax invoice or taxable invoice. So on the face of invoice, it must be written if it is a taxable invoice or tax invoice. It has meanings under GST. So we need to understand that. Taxable invoice means it shows that this invoice is being generated by a regular taxpayer, regular dealer under forward charge mechanism. So it says a registered person means who is having GST number under GST law, supplying taxable goods. So the person who is raising this invoice is a taxable person and also supplying taxable goods can issue a taxable invoice or invoice before or at the time of removal of goods. So it is important when invoice is to be raised. We will see that when we will talk about place of supply and time of supply. But when goods are removed from factory, they must carry one document which is known as invoice. Without invoice, goods cannot be moved from factory to other place. There are the cases where invoice is not required. We will discuss that also. But in normal circumstances, goods cannot move without having invoice with them. And where there is no movement of goods, it happens many times in business. There are transactions where goods are being manufactured, installed or fabricated at the consumer side itself. There is no movement because we are taking our inputs or raw material or small components to the site of buyer and we are assembling product there only and giving the final product to the customer at its site. In that case, at the time of delivery or making such goods available to the buyer, the invoice should be generated and invoice should be handed over to buyer. So taxable invoice is important. It's a document which shows that you have supplied some goods. Merely a physical movement of goods is not a supply. You cannot establish supply only through this document because ultimately record will speak. So invoice is a document which at later stage will establish that yes, there was a supply. And for any reason, if you want to receive your value, your consideration from your buyer, invoice will prove that you have supplied the goods. And in GST, supply of goods depends on the invoice and invoice must be correct in all respect. Further, question is when a service provider can issue a taxable invoice. Like supply of goods, definitely when supply of service is there, you have to raise invoice. But the question or the problem is in case of services, it is difficult to establish if service is rendered because there is no physical movement of anything in this. If I have given a consultancy of GST to any my client If I have given a written statement, written opinion, it may be a sufficient evidence to prove that I have given a service to them. But if they are taking consultancy over phone or during the meetings and paying for me, tomorrow it may not be possible for them or for me to prove that yes, I given supply, but only invoice if I have raised and if they have made payment for that will prove that yes, there was a supply of service from my side to my client. So provisions of law are there also for providing services and raising invoices, and it says a registered person means having GST number, providing taxable services, of course, will issue invoice before or after provision is made for service, but within 30 days from the date of supply made or provision is made. So friends, different business has different stories. Different transactions have different theories. I am a consultant to a company where I have agreed a term for a contract of 1 lakh rupees a year without mentioning that when I will raise invoice. They are regularly asking me so many questions, sometime verbally, sometime on mail or otherwise, and I am giving answer to their queries. And my services are subject to maximum 1 lakh rupees a year. So if I raise invoice after 1 year, will it solve the purpose? Or I should raise invoice every month? All such issues we will discuss during our topic of time of supply. But law is clear. It says if service is rendered, better you raise invoice within 30 days from the date of supply made. So my supply is continuous in nature. I am supposed to give them opinion for a year because I have a contract of 1 lakh rupees for a year. So if I have a contract of 1 lakh rupees a year, my contract must say when I should be raising invoice on quarterly basis, half yearly basis or annually. If it is not there, then definitely it will create problem for me. So better you mention in your contract itself what should be the periodicity of raising invoices. Otherwise, in normal circumstances, it is presumed that once service is rendered, you are supposed to raise invoice within 30 days. But in case of insurance, banking companies, financial institutions, non-banking financial institutions, because all are service provider, the period of 45 days from the date of supply of service. So if any banker has charged for any demand draft to its consumer, so when bank is giving demand draft to its consumer, he is charging some commission on that. That commission is subject to GST. So this bank is supposed to issue invoice to his customer. If your banker has regular customers, those are maintaining accounts with bank branch, then bank is debiting such type of commissions or charges to their bank account itself. That is also a bill for the service rendered by the bank. So demand draft, bank guarantee services, LC services, whatever services are given by bankers to their consumers are subject to GST, except interest on FD and interest on savings or interest on working capital. They are not subject to GST. They are not under the purview of GST. So they can raise bill up to 45 days. If they don't raise bill within 45 days, what is replication? We will discuss during time of supply. Further it says, in case of distinct persons, related parties. Distinct person is a concept given by GST. You may refer the definition of distinct person, but it is nothing but a related party, we can say, for the discussion of this part. Invoice may be raised, issued before or at the time of such supply, records the same in the books of accounts. So friends, to establish whether it is a supply is happened or not, we have so many evidences based on our records maintained. Maybe delivery challan, maybe some slip, maybe some advice. And once it is established that supply is made, maybe of goods or services, we need to raise invoice in normal circumstances within 30 days. And in the case of related party, it says before the expiry of the quarter during which this transaction is undertaken. So we have to take care of that. If the transaction is between two related parties with two distinct persons, then bill must go by the end of this quarter in which the transaction is happened. So friends, if you are a regular dealer, you are supposed to raise taxable invoice. If you are a dealer under composite scheme where you have some relaxation and you are not raising taxable invoice, means a composite dealer cannot raise taxable invoice and regular dealer will raise taxable invoice. That is the difference between the bills of two category of dealers or two category of two taxable persons. So person registered under composite dealer will not raise taxable invoice because he is not charging tax in his bill. He will pay tax on his turnover. And person who is regular taxable person in regular scheme is a normal dealer, he will charge tax in his bill. That's why his bill is known as taxable invoice. So what is invoice cum bill of supply? It says where a registered person is supplying taxable as well as exempted goods or services or both to an unregistered person, a single invoice cum bill of supply may be issued for such supplies. So means any person who is dealing with taxable goods as well as supplying exempted goods, who is supplying both types of goods, so his invoice, whatever he will raise, can be a invoice cum bill of supply. But normally in practical purposes, we raise taxable invoice only where exempted goods will be charged with nil rate of tax.